Nava Limited looks like a simple uptrend on the chart, but the real story is not in the price. It's the shift in cash flows, margins, and business mix that the market is only starting to recognize now. Let's start with the structure. On a monthly time frame, we can see that the stock has been in a clean uptrend, creating higher highs and higher lows along the way. The stock has actually risen from around 200 rupees to 700 rupees as of today, the last 2 years. Let's move on to the weekly chart to get a better understanding. We can see that the price has clearly hit a resistance point of around 700, right? And after that, it faced a little bit of pullback. Now, the zone that is interesting to look over here is this area of consolidation, because right after that the price has shot up. Now what this essentially does is it creates an order block for us. Now this order block can actually be used as a support level for us. Let's move down to the daily time frame to get a better understanding of this. Now once this support block is actually tested, right, by the price, and if it is respected, then what that signals is that the stock price might actually just go back up again, and the resistance would once again be at this area. Now let's layer in the fundamentals once to get a better understanding of the company. Nava is essentially a three-engine business. It works in ferroalloys, India Power, and Maamba Energy in Zambia. The real shift is happening in Maamba. Earlier, the biggest issue was receivables with Zesco. Revenue was being booked, but cash wasn't coming in. Now that's changing. Receivables have been materially reduced and collections have been consistent. At the same time, plant utilization has gone up significantly, reaching approximately 97%. This directly impacts financials in three ways. Your operating cash flow improves, your margins expand, and your earning quality improves. Let's just take a look at the net profit, right? Quarterly, if you just take a look, what we see is that there's been constant growth in the profit. Now, coming down to the balance sheet, we can see that the reserves and surplus are actually outstanding. The company is doing very well in that regard. And moving down to the ratios as well, right? The company actually is doing magnificently in their gross profit and operating margin, especially in the industry that they currently are in. Going down to the interest coverage ratio. Now, I believe this is one of the strongest points against all of their peers. The company has an outstanding ICR of 63.15, indicating that the company is actually net debt free almost, right? And that is one of the strong points of Nava Limited. Now, if there is one thing that could be viewed as negative, it is the P ratio that is at 34.8, which is not very average for the industry. But we have to understand the company has actually done very well and is ahead of other companies, and as a result, that is why it's being valued so highly. Now, how would I structure this trade? Right. So I would want this price to retest this support zone, and I would actually create a GTT for a buy order at around 650 after the retest of this zone. 100 and 650. I'll create a GTT, and now in order to sell, what I would do is I would create a one cancels the other. I would put my stop loss around 600. Actually, I would put it somewhere below this demand zone over here, say around 530. That sounds like a good place. 530, and I would buy 100 of the stock. Now that gives me around a 120 stop loss. So I will actually go for 1:2 trade over here and go for around 240. So that would be around 890 as my target. 100 and 890 once again. And that is how I would trade Nava Limited. Thanks a lot.